assets, down payment, cash to close. These are all terms you're going to hear throughout the home buying and mortgage process. And today I just want to quickly go over the differences and the nuances between your down payment, your cash to close, what are acceptable forms of assets that you can use to take care of the two. First and foremost, there's an old adage or cliche, cash is king, right? Well, when it comes to financing a mortgage, it's not. Believe it or not, cash is not something we can actually use at all. Liquid assets, something that is immediately liquefiable, but can be immediately liquefied, such as a checking or savings account, money market a lot of times. Those are great, but when it comes to cash, otherwise known as mattress money, cash you might have in a safe or what have you, unfortunately that's not something we can use, and that's due to money laundering rules. So if you do have cash that you are planning to use for your home purchase, unless you plan on buying your home with your own cash and not borrowing any money, I would recommend depositing that into a financial institution yesterday, because typically most lenders are going to require 2 months worth of account statements to identify seasoning for any cash or sourcing of any cash or assets that we're going to be using. What that means is, for example, if you have, let's say, $10,000 in cash that you have in a go bag or stash for a rainy day that you are going to now use to purchase your home, if we deposit that today, then chances are we would have to wait at least 2 full bank statement cycles to use that, because if an underwriter reviews those bank statements and sees a $10,000 deposit, they're going to ask where that came from. And if we can't document the source of those funds, if we just say, well, we had $10,000 under our mattress just in case we had to go on the lam, that unfortunately is not going to be an adequate explanation, and they're not going to use those funds. Assets, it's very important that we understand, again, typically most lenders are going to require 2 months worth of bank statements consecutive in which we show your available funds that we're going to be using for your down payment or cash to close. Some acceptable forms of assets that we can use, obviously we talked about your checking, your savings, retirement funds. You can use retirement funds, but if you are using retirement funds, typically we're going to require what are called your terms of withdrawal. That essentially are the rules. Your terms of withdrawal are the rules, the fine print to your retirement fund that explain any fees or penalties that might be assessed for early withdrawal. Typically, if you ask the manager of your retirement fund for the terms of withdrawal or the rules for early withdrawal, they can get you a copy of that. And usually the larger the company, they may actually have access to that through their website or portal. And if you're having any trouble gathering that information, you can always reach out to me and I can typically assist with it. Gift funds. A lot of people have a tendency to ask about gift funds. A gift can be used to actually take care of your closing costs and your down payment. And a gift is acceptable from a family member or close friend. What it is, it's very, very important that you understand, however, that a gift must also be sourced. Sometimes people figure, oh, well, my father, mother, brother, sister, cousin, uncle, whoever is going to give me this gift, so that should be that. They're not a part of the loan, so we shouldn't have to go any further than that. Unfortunately, that's not the case. We do have to document the source of that gift, and what that would entail would be the most recent account statement from which that gift will be sourced, updated activity from that statement end date to the present day showing the gift funds transferring from their account to your account. It has to be cleared, not pending. And then we would just get a letter signed by all parties just stating the relationship of the gift giver to you as a home buyer. and that amount, whatever the amount of the gift is being gifted towards the purchase of whatever the address is. And here's the very important part, that there is no requirement of repayment. That letter would be signed by all parties. We show the sourcing, we show it arriving and available in your account, and then we're all good. We can use those gift funds. Now, I probably should have led with this, but down payment versus cash to close. This is very common where people kind of confuse the two, or confuse one for another. A lot of people, when they hear down payment, they think that that's their cash to close, when in fact, down payment is a portion of your cash to close, right? Your cash to close would typically consist of your down payment, your prepaids. So your down payment, your appraisal, survey if required, days of interest, etc., your closing cost, and then that would equal your cash to close. Your cash to close is typically going to be a bit higher than your down payment is, and that's very important to understand, obviously, if you're planning a budget for the purchase of your home, which I would hope most of us are. Also, there's many programs out there where you can get a zero down loan. For example, if you're a veteran, they have a zero down payment option. If you're getting a USDA loan, that's got a zero down payment option. And although it's a zero down payment, we would still have to show assets, because remember, there are still some expenses that you're going to incur prior to closing that we would have to show sourcing for. Your appraisal, for example. Sometimes if you're getting certain inspections, a pest inspection, and although a home inspection is not required on most loans, it's highly recommended. Just keep in mind that although you might be qualified for or using a loan option that has a zero down payment, you still want to be prepared to provide assets, and you want to make sure that you're budgeting for that. I would typically recommend anywhere from 1 to 4% of your home's purchase price. You want to try to have set aside in an account available. Doesn't mean that we would necessarily have to use all, or maybe none. We might not have to use any of it. You just want to be prepared and have that, because obviously when it comes to financial qualifications, mortgage options, having more options is never a bad thing. Obviously, if we have different options to choose from, then there's more availability to you to possibly save, get better preferential terms on whatever loan it is that you're looking to get when purchasing your home. That's really it for today. Just wanted to quickly go over your assets, what we can use for assets. Remember, checking, savings, retirement, gift funds, and the difference between your down payment and your cash to close. I appreciate y'all tuning in. If you haven't already, please comment, like, share, and subscribe to our YouTube channel. And if you have any suggestions on what you would like to see us cover in our next video, comment below and let me know. Hope you guys have a great day, and feel free to give us a call if there's anything you need, whether it be a loan comparison, have any questions about purchasing, selling, refinancing. We're here to help. Have a great day.